Hello, and thank you for watching. My name is Rachel Barnett with Gentle Frog. I'm here to create videos for you to help you understand QuickBooks slightly better than you currently do. If you have any comments, questions, or suggestions, please put them in the chat box. Thank you.
This video is to explain and demonstrate what double entry bookkeeping is. So at the very beginning, I'll just tell you that double entry bookkeeping means that every time you put something in your bookkeeping records, there's at least one debit and at least one credit. Here's a journal entry, just a blank one so you can visualize it. What you need to have is your debits and credits have to match, and there has to be at least one of each. So your account from your chart of accounts, you're just saying there has to be something either from the list of accounts on the profit and loss, or something from the list of accounts on the balance sheet. That has to be a debit, the same thing for the credit. They can both be on the profit and loss, they can both be on the balance sheet, there can be one or the other or one. Very simply, that's double entry bookkeeping. I want to demonstrate a couple of examples because I think maybe it's easier to see if you can see, okay, this thing which I'm used to looking at in QuickBooks, here's how QuickBooks is doing the double entry behind the scenes. In the first example, and I like this one a lot because there's some stuff at the top of the screen and some stuff at the bottom of my screen. This is a bank deposit. I know it's a bank deposit because it says so in the upper left. The money gets deposited into the bank account called checking 2. The money is coming from the make-believe account called opening balance equity. The amount of the deposit is $14.56. Even though you see the 90 on your screen, this has nothing to do with anything because it's not selected. If I select it, you see the bold number in the upper right-hand corner gets bigger. I'm not going to select it. Okay, so you've got this bank deposit and the point of me showing you this is that I can say, hey, here's the double entry. With time, you'll learn to look at this and say, okay, well, it's a debit to the checking and it's a credit to opening balance equity. If you're not there yet, it's totally fine. Here's the way to find it. You'll go to the bottom of your screen and you'll click on the hyperlink that says More. You'll then click on the hyperlink that says Transaction Journal. When you do that, a second tab will open. And now what you're going to see is the journal, the behind the scenes journal entry. So the account is checking 2, it gets a debit. The other account is opening balance equity, it gets a credit. And if we refer back to this $90, it doesn't show up anywhere on our journal. So it's just there to frustrate us. It's there for reasons that I can cover in a different video. So let me close the deposit and move on with my examples. The next example I have is an expense. The word expense in the upper left-hand corner does not make this transaction an expense. It just means this template is an expense template. I want to show you something. Back in the day, back when I started working a million years ago, you could go to the office supply store and get these expense forms, right? You just go and you get these forms and they'd have carbon copies, and then, things got better and you got to use computers and Excel and so forth. Just because it says expense doesn't mean that it's an expense. The same thing is true here. Now, in this example, the account being selected is an expense account, but if this was transferring money from one account to another, you could pick a bank account here. It wouldn't mean that it's an expense. Okay, so let me revert and get back to my point. My point is that with time, you can look at this and say, all right, it's a credit to the checking account and it's a debit to postage. But if you're not there yet, you can click on More, Transaction Journal. When you look at the transaction journal, you can see that it's a credit to the checking and a debit to the account called postage. All right, let's close out of this example and I'll go to my last example, which is an invoice. When I look at the invoice, I can see that there's a product and service called services, and it's an invoice. So I know that the debit account is going to be an accounts receivable. The thing that I don't know is what is my credit account. This product and service that you see here, it's a shortcut, but it doesn't mean that it's going to map or point to or show up at exactly the same place on the profit and loss. This is really important. So let me show you the transaction journal first, And then I'll show you the products and services and what's happening behind the scenes. So when I go to the journal, it goes to accounts receivable and to services, and I managed to pick something I had voided. So let me just change it to $1 so you can see something other than zeros. So save and refresh. Okay, so now you can see $1 showing up in accounts receivable, $1 showing up for services. In Washington Department of something that gets cut off is $0. Let me just scoot this over. Washington Department of Revenue is $0. The reason the Washington Department of Revenue is showing up is because it's showing up here as an automatic calculation. Okay, so let me talk to you about the product and service. This is called services, and in this case, it shows up to services income, but it may not. And I really, really want you to know this one. I'm going to go to the gear in the upper right-hand corner. I'm going to go to the list called the products and services list. I'm going to search for services, and then I'm just going to click edit on the right. When I pick the word services on my invoice right here as a product and service, I'm going to select down here which income account is going to show up when I look at the transaction journal. So in this case, I said services, but I could have said consulting. And if I say consulting and I say update historical, we'll go back to this. Let me just refresh it. I don't know if I need to refresh. I'm just doing it to make super duper sure my example works. So I'm going to go to more actions and then the transaction journal. And you're going to see this time the income account is different, even though when we look at this, it still says services here. So now it says consulting rather than services. That's because it's whatever is set up behind the scenes when you look at the product and service list. So looping back to the beginning of this video, double entry accounting means for everything that you do, there is at least one debit and at least one credit. I really wanted you to see what happens behind the scenes. I think it's important to say, yeah, I'm making an invoice, but is QuickBooks doing the debits and credits? Is QuickBooks doing double entry accounting? And the answer is yes. If you ever are uncertain if it's doing it or how it's doing it or how things are showing up, in this video I've demonstrated how you can see that. If you have any questions, if you want to see any other examples, leave them down below. If you want to have a private call with me, feel free to book time. You can find me at gentlefrog.com/meeting. Thanks.